Good morning, everyone. Today is Wednesday, July the 5th, and this is the Moneyball Morning Report for the Benzinga Pro platform. We are looking at a little bit of pullback, not bearish at all. It is a topping formation, right? But this pullback under this very steep upside is going to bring buyers to the fore. So what are we looking at overall? Here is the close of June. That close was 443.28. Since July, we've breached it, but we're now fading just a bit. Remember, where are the buyers going to get involved? They're going to get involved with some vigor over the close of the day a couple of days back, trading days, right? So that's 442.66. Let's move this one up here to keep us on track of that space. The fade is going to bring buyers into the mix. Where will that be? Well, right, two candles to the left. Always remember, current candle, two candles to the left. So we've got potentially a 50% retrace into 440 here, maybe even 439 where this is, and then the buyers will come in. So set some alerts right here to tell you what is going on. Volume is still going to be light. Deep pockets are not going to be trading right here. We've got the employment numbers coming into the end of the week. China's services number came out last night, a little bit weaker. A couple of China numbers came out a little bit weaker. We had the Royal Bank of Australia hold their rate steady. A little bit of a mishmash in terms of what's going on. And then the UAE has pushed back against Saudi and OPEC Plus because they want to raise quotas. And of course, they want to raise quotas because they can make money that way. And so those are some interesting things to watch in general. The Qs doing the same sort of thing, topping formation, right? So as we look here, we know that the buyers are going to try to get themselves engaged. Look at this space right here, about 366 maybe. As they come down into this area, this whole region is going to be fairly choppy. But if price action does what it should do, in my mind, I would expect to see a complete fade for the ES, SPY, Qs, a fade back into this range, and then some choppy motion literally into the end of the month. Right? July is a bullish month. This is a bullish week. So dips, going to find buyers. Those buyers might give us lower highs. We just want to watch for that. Because trend is upside, you really want to look on the side of, okay, where can I find buying pressure? Wait until it comes to you and then execute. Don't jump in and say, let's hope for the best. Let it come into the level, dance around the level, let somebody win, and then follow the winners. That's really the only way to do this as a retail trader. Let's take a look at the ES. The ES is coming in nicely. Oopsie. I don't know where I took that one from. It's coming in nicely. Where were the first group of buyers? They're going to be right here. Old resistance equals new support. Blew through it like it wasn't even there. So it could do the same thing on the way down. Chances are, though, because of this just incredible pressure, we should see buyers step in here at around 44.58 or so. Watch it come in. That means you slip down into those 5-minute time frames, let them settle out, and then as soon as you see 1, fails to head lower, 2, bounces above resistance, 3 pulls back and makes a higher low. That higher low is going to be that entry point for you. You get down to a small time frame, you ought to be able to get in very, very nicely. Same mechanic I use every single time I take a trade. JJ, if you are in the micro e-futures room, which if you trade futures, that is just an amazing deal to get in there. He calls it the look below and fail. And so for me, that's the same thing as fails to close lower, bounces above resistance, pulls back, gives us a higher low. That's where we take the trade, right? Every single mechanical motion like that, he calls it the look below and fail. It's fantastic. And it's the rhythm that we all use when we're looking for a reversal of motion. Okay, for the cues, also coming in, I'm going to dig in right here, I suspect. We're going to move into these spaces at around 15,237 and then potentially 15,157. Everybody's talking about bringing in their own chips from a deglobalization perspective, and so we are seeing that all over the place in the news as well. Let's take a look at the RTY. As we look at the RTY, again, heavy congestion. Let's look at this spot. Maybe, yeah, right? See where it is right now? It's coming in right into this choppy zone. So there are two real regions that this chart can hold. You know, obviously you can tell by the way that I'm talking that I suspect that we have quite a bit of sideways motion over the next 6 weeks, but buyers are going to find these edges and just shoot right up off the top. There are so many people still caught short in the market because of the backdrop. They're trying to get in front of the move that's going to occur on the downside, but when you get in front of a move, it's not the real move, and it makes the chart head higher. So that's really what we're looking at. Let's take a look at oil very closely. A couple of things going to transpire with oil right here. We've got a little bit of war going on in terms of passage of motion here, but this bottoming formation down at the 66 and change area still remains an ideal buy zone. It's getting right up here into the frothy edges. Not particularly sure it's going to be able to hold higher simply because of all the shenanigans going on in oil and the feeling that as everyone tries to curb exports and production, that really we've got a demand problem on the horizon. All right, so watch this up at the top here, and you know, we'll see what it does. I suspect it's probably placed a short. All right, that's it for me, folks. I will see you all tomorrow.